Hi traders, welcome back to another trade recap video. So yesterday I actually took an Aussie dollar long position, secured about 2.86 up. I got out of the position for trail stops and secured about $5,700. So it was a rather small size. So let's go to the chart and let's talk about the position. So as you can see, yesterday Aussie dollar was technically in a range, right? Why is it in a range? It was because we have this, can you see the massive box here between 0.6604, 0.6623, 0.6648. So that's the way I see it. Very simple. Price comes all the way down, finding lots of rejections around 0.6598, pop all the way up, pull back to 0.6604 intermediate structure. So this is what I call an intermediate structure, which means if price doesn't break through this level, or if price keeps rejecting this level, it has a tendency to go back to the previous high, which completes a nice range here. So my entry was initially all the way down here, but after seeing that multiple rejections, especially after that 2-minute candle, can you see that? On 2-minute, we have that beautiful rejection there. I decided to not be stubborn and don't stick my ass to a specific price. I'll get in right there. Still a beautiful trade. Stop loss well under this. Why am I setting my stop loss there? Is because when I trade a pattern like this, I need to see price not go back to 0.6598, which is the low. So if let's say price does this, pull back, run all the way down, that's an invalid setup. That's why I don't mind having a tighter stops on this one. And guess what? Right after I enter the trade, price for minor consolidation, continue pushing higher and higher. So bear in mind, I did not close the position there. I actually held all the way through, then go all the way back up again. If you look at the news, we actually got GDP releasing at 8:30. That's why I'm being very cautious on the price movement, and I would not be holding it through GDP without securing something. That's the main reason why I trail my stops well under the pin bar. Can you actually see the pin bar here? So my thesis at that point was either it continue moving higher or it comes all the way down, consume the pin bar. So a lot of times when I see a position like this, of course, some of you see this, you might say, hey, you could have closed for 3 point, you could have closed for 4 up. But that's from a hindsight perspective, guys. A lot of times you need to sacrifice some floating P&L in order to achieve a bigger home run, a bigger move. That's why I was happy to sacrifice about 1 R plus, and the up price just collapsed all the way down. And I'm glad that I actually trailed my stops. If I didn't, if I was being stubborn, if I was being greedy, it would have been a complete loss. Maybe I wouldn't get stopped out, but still, it would turn out to be a disaster trade. Having to hold this all the way, see it coming all the way back, it was not worth it. So to finish this video, let's talk about a topic. So I don't like to actually give a lot of comment about other trading styles, the way other people trade whatsoever. But for me, if you saw my recent community post, I actually said that I'm not a believer, which means I don't believe such thing as SMCs or ICT. And I have my statement on that purely because I see a lot of struggling trader, sort of like a cult. They just blindly stick to ICT, blindly stick to things so-called fair value gap, things like that. I'm not here to judge whether if ICT is legit or not. But what I'm trying to say is, if you are looking to become a consistently profitable trader, we all know that you need to have a simple trading approach. Why do you need to have a simple trading approach? Is because if you are looking to be in the market for 20, 30, 40, 50 years, are you going to be there and look for fair value gap every single day? Just a question. Are you going to be there staring at the one minute chart every day? Not going to happen. All right, if you want to become consistently profitable, you need to make sure you're doing something that is easy to deal with, that is easy to identify, that is easy to stick with it for a long period of time. That's how you get a consistent data. That's how you get a consistent track record, a consistent performance. If you are already a struggling trader, then you some more go and learn things about ICT's fair value gap, 1 minute time frame, 30 seconds chart. I can guarantee your failure. I can almost guarantee that you will never make it to the top 1%. And another big thing is, when you're looking to learn from someone, at least that person has to show his face, right? If let's say today I'm selling a mentorship course for $2,000 and I don't even show my face, would you pay for it? No. Would you trust me? You would doubt me heck a lot, right? Then why is everyone just blindly following someone called ICT, inner circle trader? What does it mean? All right, how much money have you made to be calling yourself an inner circle trader? Another thing is, I've seen a lot of successful traders. I've spoken with successful traders, 8-figure traders. None of them agree with something called ICT, SMC. In fact, they don't even know what it is. And most of them trade simple support and resistance, simple supply and demand. So if these highly successful people are having such a simple trading approach, trading pure price action, then why do you even bother trading what I so-called SMCs? Alright, that's one big topic I've been wanting to bring it out. So please, wake up. I have a lot of people literally text me and say, hey, I don't have $10 to trade. Hey, I've lost $200,000, $300,000. I'm learning about ICT. What should I do? Come on, brother. Me, I'm not super successful, but at least I'm a 7-figure trader. I post everything, all of my trade recaps on my YouTube for free. But the main thing is, look at my trading approach. Simple. Look at the way I trade. Simple support and resistance, and I'm able to make it to 7 figures. So if your goal is to become a successful trader, I don't know by what mean your definition of success is, but my definition of success in trading has been to achieve 7 figures. So right now I'm at 7 figures. I'm looking to get to the next level, which is 8 figures. Alright, so please wake up, especially some of you who just cannot seem to find consistency. Please reassess, reevaluate, and review your current trading approach, especially your mindset. If there's a guru out there keep teaching you about technical blah blah blah, I can guarantee you that that person is not a successful trader. Why? Because all of us, as someone who has achieved 6, 7, 8 figures capital, we all know that trading success comes from a proper mindset. Technical analysis only takes up to 5 to 10% of your success. Do you think it's difficult to trade price action? Most people can do it. But what really differentiates a successful and a failing or struggling trader is the way they see the market. Struggling trader see the market like the 95%, like a crowd of ships. But successful trader have some sort of unique thinking that allow them to actually stand alongside with the big players, alongside with the top 1%. That's what separates the successful and the struggling trader. It's never about technical analysis. It's not about support and resistance. It's not about ICTs, SMCs, fair value gap, whatsoever shit. It's all about mindset. Alright, so that's it for the video, and I hope all of you enjoy it. If you like the video, please don't forget to like, share, subscribe, and I'll talk to you all later. Bye bye.